Welcome to the Mortgage Rates Weekly Market Update for the week of January 4th, 2016. Happy New Year. Starting off the new year right, we got a present from Santa Claus at the end of the year. Mortgage bonds were actually able to end the week last week slightly lower than they started. If you take a look at the bond chart on the screen, you can see mortgage bonds have been selling off or were able to find a bottom with that green candle there on Thursday. They're able to rebound higher and then move higher again on Friday, which is a good sign. So with them hammering out a support and ending the week with a green candle, the bond was higher than where it started for the week, so that's why mortgage rates were able to tick slightly lower. So with that in mind, building on this momentum, looking for some weakness probably to come out of China, which might help. That would make the stock market sell off. That could help bonds. We're going to recommend floating your mortgage rate to start the week to see if bonds can build on this momentum. Now, if bonds were to switch and sell off and break below that support that we hammered out, we would quickly switch to a locking stance because things could get much worse before they get better. But start the week floating. Now, in economic news, big news, U.S. Congress passed a bill which is I think it's like a $1.8 trillion spending bill. They sent it to President Obama. He signed it in law. In that bill, two big things for real estate. The first one is they extended mortgage insurance tax deductibility. That means if you pay mortgage insurance on your mortgage, you can deduct that just like interest for 2015 as long as you made less than $100,000. You get to deduct all the mortgage insurance you paid. Then it starts phasing out from $100,000 to $110,000 at $1,000 increments at a 10% decrease. So after you make $110,000, you no longer can deduct mortgage insurance. So that is great news, and that's also extended throughout 2016 with the bill. The other big thing in the bill was they also extended the Mortgage Debt Forgiveness Relief Act. That allows people that had a foreclosure or a short sale not have to pay income tax on the forgiven debt. So that was retroactive back to the beginning of 2015. So anyone that had a short sale or a foreclosure does not have to pay income tax, and they extended it out to December 31st, 2016. So if you're planning on doing a short sale or going to go through foreclosure, do it in 2016 so you don't have to pay any tax bills. And then U.S. retail sales for the 2015 holiday season came out very good. 8% increase from 2014. 2014 sales were only up 5.5%. So that's great news there. Online sales grew by 20% for the 2015. And then consumer confidence for December 2015 improved by hitting 96.5, which was above expectations and up from last month of 92.6. All of that is very good news for the economy. Consumers are spending. That's what drives the economy. Then we had weekly initial jobless claims come out on Thursday. They rose to 287,000 claims for the week, which was above expectations of 270 and a jump of 20,000 claims from the previous week. But we're still well below 300,000 claims, which is the mark we want to stay below. And that was the 43rd week we've been below 300,000. So it's still a good labor market. Then in housing news, some big news in housing. The Case-Shiller Home Price Index for October 2015 was released, and it showed a 5.5% year-over-year increase from October 2014. And home prices were up 0.9% from September to October. So a 5.5% year-over-year price increase is a very sustainable, very good number. Not too hot, not too cold. So why should you buy a home in 2016? Well, if home price appreciation can maintain 5.5% and you were to buy a home in January of this year for $200,000, it would be worth $261,392 in 5 years. So if you paid $7,000 in closing costs, that means your net gain would be $54,392. That's with a 5.5 point appreciation year over year for the next 5 years. Very sustainable. That's a huge increase in your investment of $54,392. So that's a big reason to buy a home. Get out there, get under contract. Now, existing home sales for November 2015 were released, and they dropped 10.5% for October on an annualized basis to a rate of 4.76 million homes. It was the sharpest monthly decline since July of 2010. Now, the biggest culprit for why new home sales dropped was the new TRID regulations. A lot of lenders are having trouble meeting the closing dates because of all the new guidelines, the paperwork, the mandatory wait periods, trying to coordinate with the title companies and drawing up these new disclosures. That is the biggest attribute to why new home resales dropped for November. Now, if you need a mortgage company, you can still close a loan in 30 days. Primary residential mortgage is still closing loans in 30 days, sometimes less under the new TRID guidelines. So if you need a loan and you need to close 30 to 45 days, you better call Primary at 302-703-0727 or 410-412-3319. We are closing them. We're getting it done. Then we had pending home sales for November 2015. They were up 0.9% from October, which was a miss as the market was expecting. They were down 0.9%. The market was expecting a gain of 0.5%. Now, pending home sales measure the number of new contracts to purchase existing homes, so it's a measure of future home sales. So it actually dropped by 0.9%, slightly a miss. But NAR is predicting 5.25 million total sales in 2015, which is the highest since 2006. So even though we're ending the year slightly down, we're still going to have a record year for home sales. It's a great market. We still have low inventory. Still another reason to get out there and buy. It's going to be putting home price pressure for homes to appreciate. Now in the local news, if you're looking for a first-time homebuyer seminar, we've got two coming up in Delaware. Saturday, January 16th, we have one in Newark, Delaware from 10 a.m. to noon at the Christiana Hilton Hotel. And then in Dover, Delaware on January 30th from 10 a.m. to noon. That's a Saturday at the Dover Holiday Inn from 10 a.m. to noon. You can register for either one of those events by calling 302-703-0727 or online, DelawareHomebuyerSeminars.com. And then in Maryland, we're going to have the next event coming up in February. That date will be announced next week. So again, any questions, give us a call. Look forward to seeing you guys next week.